Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 News studios. I'm Prashant. As always, over the next 2.5 hours, my colleagues Sonia and Nigel with me. Guys, hi, good morning.
Hi, good morning, Prashant. I hope you're feeling better today.
A little better.
Missed you on Friday.
Yeah, and it's a big day tomorrow.
What is it? I don't know.
Today's Feb 13th, right? So
14th.
Inflation numbers.
Okay.
That is day after tomorrow for us. And I get your point.
Nigel's a big believer in Valentine's Day, by the way.
For sure.
All the gifts coming up. And
I'm a big believer. My parents, they started dating on 14th of February. And for me, it's
For Nigel, though, the gifts are all incoming. Huh? It's not outgoing. So that's...
I hope so. But I'll track the inflation number.
All right. So it's a nice... mood with which we begin this new week. But is the mood globally, this upbeat? I would say perhaps not, right? Let's just quickly run you through what top of mind really markets are watching out for. This is the picture on Friday and what we had. The Nasdaq was down 0.6 odd percent. And you've got the dollar index, which actually surged. It's now closer to 104. So equities are down, the dollar is up, and oil prices are now closer to $86 a barrel. So this is, the trioca, which is not moving in the direction you want it to. You would want the reverse. And that's the reason why I'm kind of going to begin by saying that things are looking a little more adversarial. The global setup is looking a little more adversarial. Nasdaq going up and down is fine. But the bigger thing is what's happening to, the dollar, which is going up, and oil prices which are moving up as well. These are yields, by the way. Look at the sharp surge we've seen in the last week. This is Friday to Friday, the 2-year, which is the front end of the US rates market, the 5-year and the 10-year, 23, 27 and 22 basis points up. So the market has very quickly repriced itself to expect more rate hikes, maybe rates to stay higher for longer. All of this, of course, happening after last Friday. Not the previous Friday, but the Friday before last, when we got the jobs data out of the US, which was very, very strong. Despite all of that, we heard from Fed Chair Powell, right? We heard from him last Tuesday. This is after the jobs data, and he did not sound, he didn't change his view or anything. He did not sound incrementally more hawkish, given the fact that the jobs data was strong. But we had so many other Fed members, and so many of them spoke, and all of them came across as more hawkish incrementally. So I think we are kind of back to watching the same dynamic. Data is turning out to be strong, and markets are reading that to be a bad signal because central banks and the Fed will have to be more hawkish. But all of this could change. We got the CPI numbers, as we were just discussing, on Tuesday. We will react to it on Wednesday morning. And then on Wednesday, US time, we'll get the retail sales data as well. CPI is the more important of the two, but I think the retail sales number will also tell us how the US economy, the US consumer is doing. If the number is, benign, I think the markets have scope to rally. If the CPI number is stronger than expected, and I think the expectation is running at about 0.5% rise month on month, I think it's got the scope to dampen sentiment even more. Just come back to here, the market, which on Friday did not do very much, at least at the index level. The Nifty was, down about, 0.25%. The Bank Nifty was, a little flat to slightly higher. But the Nifty is once again closed just under, a smidge under the 20-day moving average, which is now at about 17,871. We closed at 17,856. Supports for the Nifty should come in around 17,650. We are, again, that budget day range, the high to low, ever since the budget, we've not crossed the high or we've not broken below the low. We are within that trading candle. The Bank Nifty is again just under the 20-day moving average. It's for the Bank Nifty that stands at 41,643. And the banks, I think a close above the 20. And same is true for the Nifty as well. The 40-day exponential, which is above the 20-day, I think becomes important for the Bank Nifty. That number is at about 41,905. Will we take all of that and will we get to those levels today itself? I think it's perhaps kind of hard. Look at what the SGX is doing as well. But I think those are the levels or the markers to watch out for as we begin another week. Guys, hi.
Hi, morning. There is some scope for the market to perhaps break out of the upper end of the range, right? There are a lot of cues that are stacked in favor of the bulls this morning. But the range has been so, we've been consolidating for such a long time. Let's see if we manage to sort of scale up above that level. Now, foreign investors bought in the cash markets after many days. After, I think, 6 days of selling, FIs bought in the cash markets on Friday. So that's one positive that I'm looking at. FIs bought about 1,500 crores or so in the cash markets. There was a strong handover from the US as well. The Dow was up 170 points. Now, the worry in the macro setup is that Brent is back above $85 a barrel, and Russia, in fact, has said that they'll cut output by 500,000 barrels a day. So that could keep Brent above this level, $85, $86 a barrel. So that's not good for our own markets. But positive global cues, FII buying. Also, remember the Nifty, is finding a bit of a resistance around that 100-day moving average of 17,943. Important to see if that can get taken out today. It's not too far away, but it's proving to be a bit of a hurdle for the market. A couple of pockets to watch. Capital goods stocks could be in focus. Good numbers coming in from ABB. BHEL's numbers were not too bad either. And a couple of the other names have also been rising over the last many days, so keep an eye out on that. And by the end of last week, the Adani Group stock staged a comeback. So Adani Ports, Adani Enterprises were all up about 15-17% last week. So that entire pocket will also be in focus. But give and take everything, looks like the cues are stacked more in favor of the bulls. But let's see, it may take a while for this market to break above the range.
Well, that's right. Do we have a case to get past that 17,950 to around 18,000 odd marks? That's the question. And maybe this week, the cues could take us, depending on that inflation number. Well, for the past week, after a while, we saw the Nifty performed either in line or outperform some of those developed markets. The Nifty ended more or less flattish. The Nasdaq was under pressure, and a couple of other global peers as well were under pressure. Global cues are more or less stable. We're waiting for that crucial inflation print, which comes out tomorrow. And buying around 17,750 for the last couple of sessions, well, that's worked. Finally, if everything goes according to our favor, then the FI shorts in the system, that's what could provide a bit of a booster shot, because the shorts will get trapped on the short side. Let's tell you what are the cues coming in from the FNO markets then. On the Nifty itself, the Feb futures, the premium came down to around 28 points odd. That's telling you that there were some shorts on the Nifty. However, on the Nifty Bank ended more or less flattish, and the open interest was lower, so there was some short covering that did take place out there. On the FI action, well, the FI is under 10,000 short contracts. That takes the short position to around 82% odd. And it appears they were shorting the Nifty itself. On the option side, no big direction coming out there. They bought close to 2 puts for 1 call. So in case things go wrong, then there is some cushion. But on the writing side, well, they wrote 1.2 lakh contracts of both put as well as the call side. Moving to the options data, the Nifty Bank, that's going to be very, very important. And I say that because the Nasdaq is underperforming and the Nifty IT index has taken a bit of a break as well. So the 41,500 put, well, that was written. Take a rough premium of around 300 rupees. Also, they are counting on the 41,200 odd mark holding out. On the Nifty, well, it's a battle of which way the Nifty is going to swing off the 17,800, because 17,800 call as well as put, well, they were fairly active. Let's get straight to the levels then. On the upside, the 20 as well as the 100 DMA becomes a bit of a resistance zone. Just take note of those marks, both on the Nifty as well as on the Nifty Bank. While on the downside, in the near term, 17,750, crucial for the bulls to hold on to that. On the Nifty Bank, 41,200 odd. For starters, we're expecting a bit of a pullback. The last couple of days, buying a deeper dip, well, should work out. So maybe closer to around 17,750, 17,800 should be risk-reward favorable for the bulls. Let's see how this one pans out.
Okay, I also want to, mention that last week the theme was the new age tech companies, right? And the kind of revival that we've seen in a lot of these names, whether it's Paytm or even Zomato. Today you have Nykaa coming out with numbers, so that would be an interesting one to watch. Of course, there's a sea of numbers today, but apart from Nykaa, there's also SAIL, there's PFC that comes out with earnings, so lots to watch out for. By the way, Bharat Forge comes out with numbers this week as well, so we'll keep our eye out on that. But lots happening on the show.
Oh, absolutely. Let me just quickly run our viewers through what's lined up here in the first half hour of the show today. We'll get you updates from markets across the globe. Mark Matthews of Bank Julius Baer and Company will join us to discuss the global setup. Later, a research team will bring you CNBC-TV18's list of top 10 stocks for the day. And at around 8:30 in the morning, we'll get a fundamental stock check with Prakash Diwan, who will be with us as well.
Okay, all right. So let's begin the show then. On the equities front, first up, we have a comment coming in from Surendra Goyal of Citi. He says the Indian market is at an interesting juncture. Its post-outperformance valuations are high, but India could continue to lead in growth, that too broad-based and domestic-driven. Further, he adds, significant medium-term secular opportunities exist for growth, driven by penetration levels that have considerable room to rise. Market share shifts and the global need to de-risk supply chains. According to Citi, India could potentially lag the upturn in growth elsewhere. in emerging markets, but they believe it's a must-have exposure for global funds over the next decade.
Okay, some money market news as well. This is B. Prasanna of ICICI Bank, who says that dollar strength triggered by last week's strong jobs data remains supported ahead of January CPI as the market is preparing for higher rates for longer scenario. A hawkish MPC outcome helped rupee from sharp depreciation, but the USD-INR pair is expected to trade with weakening bias owing to persistent outflows from equity markets and recent dollar pullback. RBI is expected to smoothen volatility on either side, and for this week, Prasanna expects the rupee to continue to trade in a range of between 82 to 83 to the dollar.
All right, and on the bonds, B. Prasanna of ICICI Bank says global yields continue to drift higher amidst higher for longer narrative and stronger economic data. Domestic yields also retraced higher as the MPC announced a hawkish hike and a data-dependent approach. The unwinding of rate cuts that was priced in towards late 2023 had a bigger impact on the derivatives front. He expects the market will take cues from the upcoming inflation prints and trade cautiously, with the 10-year benchmark trading between 7.2 to 7.4% range.
Well, there are plenty of stocks that we need to track for you, and we'll get to that in just a bit in our special Top 10 segment, but we're looking at ABB India, BHEL, Oil India, Nalco, PB Fintech, and Glenmark. They are stocks that could react to positive news flow. On the flip side, you have RVNL, Info Edge, Balkrishna Industries, and Delivery. They are stocks that could be potentially reacting to negative news flow of the weekend.
All right, so that's what's lined up here. Power Pact, as always. Mark Matthews of Bank Julius Baer and Company is joining us now to take some questions. Mark, great to have you with us here. Thank you very much. We've got a situation where yields have moved up sharply after the jobs data in the US. The dollar has inched higher, and oil prices have moved up as well. What do you make of the situation as things stand, and how crucial will the consumer inflation number out of the US be to set the tone and narrative going forward?
Prashant, I make of it that the big oomph we had at the beginning of the year is fading in markets, and there's not a whole lot of impetus to buy. And I do think there's a risk that the January CPI will come in higher than expectations. The reason I say that is the expectations are 6.2%. But if you go to the Cleveland Federal Reserve's website, they have an inflation research department where they nowcast inflation, and their track record is actually better than the consensus of economists. They're looking for 6.5. So 6.5 would be the same as it was in December, obviously, and not something the market would like to see.
Oh, okay. Mark, good morning, and as always, thanks for being with us. So what is the way to approach Indian markets now? It's been a fairly decent run so far compared to most global peers. The only thing is we're stuck in a bit of a range for the last many days, and now most of the large cues are behind us, whether it's the RBI policy or the budget. Are you getting a sense that there could be a move on the upside in the Indian markets? And if yes, compared to peers like China, do you still believe that China has a bigger edge because of, the valuation comfort there?
Yes, precisely. China's cheap. It really is still very cheap, despite the fact that it's up almost 50% from its low in October. It's still down almost 50% from where it was in 2018. And I know that the geopolitics are heating up with this balloon and these UFOs over Alaska and Canada. But if you think back to 2017, the year Trump took office, the Hang Seng Index, Hong Kong stock market, rose 50% despite the geopolitics. And to my mind, the biggest thing in China is that they've put COVID behind them. They're opening up. I myself have been traveling around Asia the last couple of weeks, and the airports are packed, the airplanes are packed, and there's lots of Chinese people moving around. So that also, I think, could explain the oil price, and the oil price is at the tip of a pennant formation. So technical analysts will tell you when you break at the tip of a pennant, you'll either go up or down. My sense is it's going to go up because China's reopening. Russia's about to do a big new invasion of Ukraine, 300,000 troops massed on the border. So all of that, I think, would be a little bit negative for India. It's dependent on oil more than other countries, and China sort of taking the wind out of the sails. And on top of that, the whole Adani thing sort of casting a pall over the market from foreigners' point of view.
Hi, Mark. Morning. You've made the point that domestic flows are going to lead the Indian markets higher, if at all, and going to give further direction because the FI holding anyways hasn't been very high. But for the past week, one positive was the FIs are selling at least a little bit less. Do you think after the kind of selling they did in January, maybe they're nearing exhaustion, at least in the near term?
Well, Nigel, I don't know. I just think that on balance, the people would be more interested in other places, specifically China, right now. But, you know, the thing that you mentioned about the domestic investors, you're absolutely right. And that's what makes me still like India, among many other reasons. But it doesn't really matter that much if foreigners don't like the market. It would be helpful if they did. But the fact that you've still got this big domestic base of investors that's increasingly attaching itself to the equity market through the systemic investment plans, very reminiscent of the 401ks in America, their retirement plans. And the reason, one of the big reasons why the U.S. market has been the best market in the world historically to invest is that Americans themselves believe in their own market and they buy it for their retirement. And I think that's happening in India now too.
Oh, absolutely. The equity cult has grown by leaps and bounds over the last many years. Thanks a lot, Mark, for joining in and helping us with your view on the index as well as on the way forward for the global markets. That's Bank Julius Baer and Company. Let's slip into a quick break. On the other side, our entire team will be with us to help us with the list of top 10 stocks as we begin a brand new week of trade. Stay tuned.
Good morning. So InfoEdge has clocked in a revenue growth of 33.5% on a year-on-year basis. Now, this is slower than the over 50% growth that it's enjoyed in the prior 4 quarters. So on the top line, there is some moderation in the revenue growth. This is attributed to the slowdown in IT hiring. And we've heard this from the other staffing companies like Quest and Teamlease too, that IT hiring has slowed down considerably. And analysts estimate that for Naukri, which is a bulk of InfoEdge's revenues, nearly 50% of the revenue of business comes from IT, and IT has seen a bit of a slowdown. That said, margins have improved for the company substantially. Margins are at 39%, practically at an all-time high levels, and that's because the ad spend has moderated. The ad spend as a percentage of revenues is down to 13.5% versus levels of 18 to 19%. At the bottom line, though, there is a loss of 84 crore because the company has taken an impairment charge in one of the investee companies. Remember, InfoEdge invests in a lot of startups. One of the startup companies was 4B Networks. This was a B2B real estate platforms which helped connect developers with brokers. So unlike 99 Acres, which is a B2C platform, this was a B2B platform. The company is saying that this company, 4B Networks, has been unable to raise funds. There is a funding crunch, which is why the company has taken an impairment charge in that business, and they've written off their entire investment of 284 crore, and that's the reason why there is a loss. Exceptional charge of 276 crore, and that's the reason why at the bottom line there is a loss of 84 crore. And the street might just start worrying that is this something which can happen to its other investee companies too. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, let's hop across to Vahista. Vahista, it's been a busy weekend for you in the last few days, but today you're tracking ABB and BHL. How are those numbers?
Hi, Nigel. Good morning. Well, ABB numbers have been quite good. In fact, this was a result of the good execution of the domestic market as well as their export customers. The revenue growth has come in at 15%. Also, there's been an improvement in margins following the pricing actions. The margin expectation was 10.3%, but the actuals have come in at 15%, which means a 500 basis points near jump on the estimates. All segments have performed well. There were large volume orders in the industrial solutions and segments such as data centers and electrification. As expected, there has also been a sustenance of the order inflow momentum, and the order inflow for the entire calendar year of 2022 has crossed 10,000 crores for the first time. So I'm going with a green on the stock. The next result is BHEL. The results have not been bad. They have in fact been quite good. On an operating level, the company is profit making. In fact, the EBITDA margins have improved 100 basis points on a year-on-year basis and come in at 2.7%, though the finance costs have jumped this quarter. The power segment has also performed well, with EBIT margins coming in at 11.1%, which is to be compared with 8.3% in the same quarter of last year. So positive over there. The order book, though, is nearly flat at approximately 1.04 lakh crores. All in all, I would say it's been a good set of numbers for BHL. In fact, the management has also highlighted that the demand momentum is quite buoyant. So going with a green on the stock as well for today. Back to you.
All right, thanks a lot for that. So those capital goods companies looking good, but the stock of the day on the downside could be Balkrishna Industries. Very weak numbers coming through this time. Total income growth was barely about 7%, but it's the operational performance that got really hit. Look at that. The EBITDA has gone down by 17%. The margins have fallen to sub 20% and big fall in profitability. The management, in fact, in its presentation has said that the company is experiencing a channel inventory clearance in the end markets. So there was a lot of excess inventory which is getting cleared, and in the OHT segments of highway tire segments as well as in other tire segments as well. Not just that, slow lowering of raw material prices and an improvement in delivery timelines has led to a slower ordering cycle by the channel. They continue to face challenges in the global markets and recession fears continue to hit demand. So I'm going with a bright red over there. In any case, Balkrishna has been really volatile. You know, post numbers, there's a sharp reaction either way. And the last 3 months, the stock has been up 22%. So some profit taking today, perhaps.
Okay, all right. Sonia, thanks for that. Well, going back to Mangala. Mangala, what about delivery? How are those numbers?
Well, they were soft numbers. You know, quarter on quarter, the revenue growth was just about 1.5%. But operationally, there was improvement quarter on quarter. We saw the EBITDA loss come down from 138 crores to about 73 odd crores. And as a result of which, on the bottom line as well, while the company remains to be loss-making, they have narrowed their losses from 250 crores to 195 odd crores. But year on year, the numbers look much worse. 9% decline year on year in terms of revenues, and EBITDA loss came in at 73 crores versus a gain of 54 crores. The company said that the revenue from their express parcel services, which is one of their largest contributors, was up 7% quarter on quarter, led by 5.5% volume growth. But the part truckload business was down quarter on quarter from 293 crores odd to 277 crores. While these numbers are soft, remember the stock is also down about 55% from the peak. Jefferies believes that maybe operational improvement is likely to continue, and with this decline, they see some green. But my sense is that these numbers are soft, so maybe a bit of a red to start things with.
All right, Mangalam, thanks very much for that. Sonal is here with details on Oil India. Sonal, hi, morning.
Good morning. It's a green for Oil India because it was a good set led by higher realizations, and despite the windfall taxes, the company has been able to deliver on oil realizations as well. So revenues at 5,300 crore rupees, EBITDA came in at 2855 crore rupees versus 1848 crore rupees. There was a substantial jump in margins as well, 53.1% versus 39.8%. Profits also flat on a quarter-on-quarter basis, but that was because of lower other income as well. Net oil realizations, they actually increased on a quarter-on-quarter basis to $77.1 per barrel versus $74.7 per barrel. Additionally, the Numaligarh refinery expansion, this is expected to be completed by FY24, FY25. The capex is around 28,000 crore rupees, which will be funded 70% via debt and 30% via equity. So it'll get commissioned, and that will add to earnings as well going forward. Motilal Oswal has a buy rating on the stock with a target price of 272. They like the fact that the government is allowing a post-windfall realization of $68 to $81 per barrel. That definitely bodes well for all the oil producers like Oil India and ONGC as well.
Okay, thanks for that. Well, Nalco is something that you should keep on your radar as well. Nigel, why is that?
Well, that's right. Too many weak earnings. So, Sonal and me are filling in for a couple of good earnings. Oil India was one, Nalco was the other. On the top line, there was an expected drop on the top line. That was more or less, on expected line because LME prices have been weak. Moving to the numbers, they were good because on the EBITDA front, just take a look at it. On a sequential basis, there's a good improvement. From around 10% or the margins have moved to around 14%. Even the absolute number has gone up. So I like that. Two factors played out. One is on the base, you had in the base year, you had the employee cost, which was very high. So on that high base, employee cost is down by close to 21% on a year-on-year basis. And the second factor, the cost of power, well, it's come down dramatically actually on a sequential basis. It's down by close to around 20% on a sequential basis, and a percentage of sales, it's come down to around 33%. The aluminium as well as the chemicals business, that's alumina business, comes up for you. And on the aluminium business, there's improved performance. So explains why the stock should open up in the green. But Surbhi is with us to tell us about PB Fintech. Good numbers?
PB Fintech reported its third quarter numbers, and the company is on track to achieve adjusted EBITDA break-even by the fourth quarter of this fiscal. Their total revenues were up 66% at 610 crores as the insurance premium grew by 70% on a year-on-year basis. Their EBITDA losses have narrowed to 133 crores versus a loss of over 300 crores same time last year. In their existing business, the profitability continues to improve. The revenues were up 34% at 425 crores, and they reported an adjusted EBITDA profit of 26 crores versus a loss of 41 crores same time last year. In their new initiatives business, the revenues were up almost 4 times at 185 crores, and the burn rate in this segment has come off sharply. They have reported an EBITDA loss of 54 crores versus a loss of 51 crores same time last year. It's the margins which have contracted sharply at a negative 29% versus a negative 100% same time last year. The management has maintained the guidance of achieving 1,000 crores of PAT by FY27.
All right, thanks very much, Surabhi, for that. Now, Glenmark and RVNL are the next two stocks we're going to focus on. Ekta is here with the details. Ekta, morning.
Thanks for that. I'll start with Glenmark. Revenue was up around 9%. Street was anticipating a 6% growth. Margins in line with estimates at 18%. Profit was better than expectations at around 290 odd crores. India was up only in single digits, so that was a little bit of a deterrent. But US sales did well, so $100 million in terms of US sales for this quarter. Objectives for FY23, revenue growth of 6 to 8% sustained. EBITDA at similar levels for FY22, enhance the free cash generation and potential out-licensing of innovative assets. So they haven't really changed their guidance for FY23. Call is at 9:30 a.m. today, so more details then. Rail Vikas Nigam, we can expect the stock to probably be in the red. Revenue was flat, margins came down to 5.5%, but the profit was up around 30-odd%. But the flattish performance on the revenue and the margins should probably result in the stock seeing some profit booking.
Okay, got that. Thanks a lot, Ekta, and thanks to our entire team. In case you missed out on any of the stocks, here's a quick recap. Stocks with positive news flow. There's ABB India, BHEL, Oil India, Nalco, PB Fintech, as well as a couple of others that should come up for you with Glenmark Pharma. And stocks with negative news flow, there's RVNL, InfoEdge, Balkrishna Industries, very weak numbers, and delivery as well. But let's put focus now on the Adani Group stocks. Adani Ports, Ambuja Cements have moved out of the ASM framework. In fact, a lot of them recovered last week as well. Let's find out what's the latest here. Vivek is here to give us details. Vivek, over to you.
Well, absolutely right. Quite a lot of news flow over the weekend as well. So as you mentioned, Adani Ports and Ambuja Cements have moved out of the ASM framework, which means that the additional margin requirements have now come down. But it's important to note that Adani Enterprises continues to remain within that particular framework. Now, the other thing to keep an eye out for is that rating agency Moody's, while they have not cut the rating on any of these companies that they are actually tracking. However, what they've done is they have reduced the outlook that they have from a stable stance to a negative stance on 4 out of the 8 stocks that they actually had coverage on. So Adani Green Energy, Adani Transmission, and 2 other groups within this particular 2 stocks itself, they have actually gone ahead and reduced their outlook. Lastly, some more pledging activity has happened as far as, some of these stocks are concerned. So in favor of SBI Cap Trustee, you're actually seeing further pledge being created in Adani Ports, Adani Transmission, and Adani Green. Adani Ports, the pledge has now gone up from 0.65% to 1%. Adani Transmission, the pledge is now up from 0.44 to, 0.5%. And Adani Green up to almost a little over 1%.
Okay, all right. Thanks, Vivek, for being on top of the entire group of stocks for the time being. Ahead of that Supreme Court hearing on the Adani Hindenburg issue later today, the finance minister reiterated that India's experienced regulators are on top of such issues and will handle them appropriately. Let's listen in.
India's regulators, and I'm sitting in the company of a very senior regulator, one of the oldest regulators in this country. India's regulators are very, very experienced. And they are experts in their domain. So the regulators are fairly seized of this matter and they are on their toes, as always, not just now. So I would leave it there, because you've just told me what has come out this morning. I'll leave it there.
Back. We have so many stocks to discuss. Let's get straight to it. Prakash Diwan is joining in first up. Prakash, I want your thoughts on these new age tech companies. PB Fintech, actually the company is now closer to profitability, as they say, and they're maintaining their guidance of 1,000 crore profits by FY27. And we saw the big move last week in, both Paytm and Zomato. What's your pick of the pack here?
Good morning, Sonia. So, it's quite interesting the way all of them behave in a very similar pattern. Now that everybody's figured out that the street is absolutely, disappointed with lack of profits or anything close to profits, they started singing the same tune in terms of when they get profitable and then started throwing out numbers or dates or timelines or whatever. It's just, I think, to assuage the market sentiment in terms of these companies. The shareholding pattern has gone through such a major shift. Actually, if somebody were to do an analysis on a quarter-on-quarter change in the SHP, you'll realize that the institutional investment that started off post IPO, around the IPO, is absolutely nowhere close to where it was, given the fact that there's so much of retail participation, distribution that's happened. So stay away from these companies till they actually turn profitable. I mean, FY27 is, it's not close, it's not nearby. It's too distant to really start giving some sort of premium valuation. Though the business model and all are fantastic, difficult to replace and replicate. But, that goes for the same is for delivery. I mean, that's the other company that people are believing will start turning operationally profitable at some point in time, or the losses will minimize. So this whole thing of loss reduction getting rewarded is a far-fetched idea at this point in time. I would believe there are far better opportunities in companies which have more established cash flows and profitable unit economics than to invest in these companies. So keep them on the watch, but don't get carried away.
Okay, all right. Hi, Prakash. Morning. Do a couple of these PSU companies that delivered good numbers, Nalco or Oil India as well. There's a problem with PSUs, because of the discount they get. But some of these numbers look quite good. Your take on them, particularly Oil India, if you have a view.
So, good morning, Nigel. So, you're absolutely right. I think what's happening is this whole new wave of capital expansion that's happening, the kind of projects that are getting executed. PSUs are definitely going to play a very pivotal role. And in some of these sectors, because of the strategic nature of their presence, the role that they play, there's absolutely no way you can replace it. Whether it's a defense play by HL and the likes of Bharat Dynamics, or the railway expansion story with BEML, and the electronics story of BEL. So all of these companies will, while they do have a discount because of the kind of uncertainty that goes along with the nature of their DNA, it's also a premium that comes along with the market share and the kind of opportunity that they sit on. So, I think from that perspective, you look at Oil India, while oil is something which has played such an important role, it's just now that they've started coming into that scale of inventory execution, and the order book which they sit on, if you see, it's started gradually translating into higher metrics in terms of execution, and that is something, of course, coupled with better realization on oil in this entire quarter has helped. But their key focus on the execution side and on the downstream upstream businesses is something which you should definitely keep a premium for. But PSUs as a lot is something which you only need to cap at about 10-15% of your portfolio. So if within that, if you have room, yes, it's more of a portfolio call, Nigel. But I think the numbers definitely were quite encouraging, and there could be some revision in targets or expectation of price objectives going forward from this day.
All right. Let's take a little breather from talking about individual stocks and speak to our management. So, Prakash, just hold on. In fact, I want your thoughts on this one as well. Gokaldas Exports reported a very muted growth for the third quarter, while the company's gross margins also contracted, although their profit after tax witnessed a growth due to higher other income. Now, the management had alerted us in the previous interview that things are looking a bit weak. There is a slowdown in pockets like Europe, and perhaps they could see muted growth, and that's what's come through in Q3. Sivaram Krishnan Ganpati, the MD at Gokaldas Exports, joins us now to talk about that. Mr. Ganpati, good morning. Last time you had mentioned that you would see single-digit growth, but it's slower than that. I mean, year on year, it's actually a fall of 0.3%, and quarter on quarter, it's a fall of 9% that we've seen on revenues. Tell us, how weak is the situation on the ground? Which are the pockets where you're seeing a slowdown? And do you see any recovery in Q4?
No, so the way I see it is it's a flat revenue, but our EBITDA margins have gone up. The reason the EBITDA margins have gone up is because we became a lot more productive, and we offset some of the headwinds that we've had in terms of slower demand coming through. So the company has done a lot of those things, which has resulted in a higher EBITDA margin, and hence profitability of the company, or the net profit has gone up. I think we intend to continue our thrust on productivity improvement, better customer relations, etc., to weather through this short period of downturn. I had earlier indicated that H2 will be weak or will be soft, and that's how it's playing out. And that's the nature of the market because the demand in the Western world has slowed down. I anticipate that somewhere from H2 of next year, we should start seeing growth back again because, in H2 of next year, we'll be producing for spring and summer of 24. And I anticipate that we should start seeing growth. In the interim, on a sequential basis, we will start, slowly nudging up from Q3 levels. But the real strong growth will happen in H2 of next year. That's the current prognosis that I have. All this while, we will focus on keeping our margins and delivering a strong bottom line.
Okay, all right. Hi, good morning, Mr. Ganapathy. You want us that Q3 will be more or less flattish, and it's come more or less flattish on a year-on-year basis. Now, for Q4, you're sitting on a base of close to around 585 crores. That's what you did in the Q4 of last year. So, in that sort of a base, will you be delivering again a flattish revenue number? And what happens to the revenue number for the year? I think earlier we were talking about a number in the vicinity of around 2,200, 2,300 crores. Is that still on? And on that base, what do we grow at? Go ahead.
So that the range that you indicated to me, that is as of now totally on. We will be delivering our numbers to that range. As far as Q4 is concerned, as I said in the immediately forthcoming quarters, on a linear basis we will grow. So the way I'm looking at it is that our Q2 was slightly lower than Q1, Q3 slightly lower than Q2. And, I think we are more or less bottoming out in terms of sequential quarter-on-quarter. We will start seeing growth. Whether it will be, equivalent to previous year's quarters, answer is probably not. But we will start catching up very quickly on it and then start outperforming that. So the way I look at it, sequentially, we have been dropping in response to demand situation. But then that curve is now turning up and we will start growing again sequentially.
Okay. I mean, Mr. Ganapathy, hi, good morning. Prashant here. The jury is still out whether we'll get a recession in the US or not. We get retail sales data this Wednesday out of the US. I think that'll be closely watched. But, one thing everyone agrees that right now there is no recession. If it is to come, it'll come later. So when you say H2, perhaps strong growth, I mean, it's a projection, right? I mean, depending on how the underlying environment is.
So why I'm saying H2 FY24 is because H2 we will be producing for calendar 24. So by then, I'm anticipating that whatever recessionary effect that would happen in the US would be out of the way. And again, there will be a strong growth. The base effect will also help in that market. So that's the sentiment that I'm getting from talking to people there. And, we are anticipating that calendar 24 will be strong, which means our second half FY24 should start picking up very strongly.
So if you can help us, sure. I mean, we're a little short on time. So if you can give us a number, you said by the end of FY23, you're looking at revenues of anywhere between 2,300 to 2,400 crores. What would it be in FY24?
No. So Prashant said between 2,200 and 2,300, and I concurred with that. So that's the number.
Right, 2,200 and 2,300, got that. And for FY24, what would the growth be?
My anticipation is there'll be growth, but it's hard to pin a number at the moment.
Okay, very quickly then, you said your margins as well. There's been focus on that, and this is Nigel, by the way, Mr. Ganapathy. What kind of a margin band will you look at? 11.5% odd, or can you improve from here?
So our effort will always be to improve from there, but at the moment, given the softness in the market, that's the kind of margin we will try to hold on. For sure.
Always good hearing your thoughts, Mr. Ganapathy. A little shorter chat is what we've had with you, but we look forward to touching base with you in the next 1 month or so and see how the situation is evolving in the US markets. For the time being, 2,200 to 2,300 crores is on for this year and margins in the vicinity of around 11.5%. Slip into a short break, but on the other side, we'll connect with Sudarshan Sukhani as well as Mitesh Thakkar. They'll join in for a technical check on the markets.
You're with us here on Bazaar Morning Call. Anuj is here in the studios to tell us what he's making of things. Anuj, morning. What are you watching?
Morning, Prashant. The Nifty is right at the trend line and at the top of the trend line from where it can slip. That's my worry for the market this week. In any case, the range has been narrowing. The last week range was 17,721 to 17,893, with buying at 17,700 and selling at 17,900 working. In January, if you remember, this range was 17,900 to 18,200. So important for Nifty to break out of this. Also especially important because global markets are now beginning to realize that rate hikes are not done yet. And the best example of that is NASDAQ. For last 3 days, it's been falling and it closed below the 10-day exponential moving average. And next level to watch is the 20-day exponential moving average. I talk about it because it has direct impact on the Nifty IT, which has been the leadership pocket for the market for last 1 month or so. And that's also very close to its 10-day exponential moving average at 30,500 or thereabout. So that's an important point. Also, the Hong Kong markets have also started to fall a bit. So, I mean, it's very interesting to know where is the FI money going now. Talking about the levels, well, the Nifty closed just at or below the 20-day simple and exponential moving average. So that's why it's a make or break zone, because last time when we had a halt at this trend line, the Nifty fell 600 points. So it's important for Nifty to negate this. On the bank Nifty, you can make both bullish and bearish argument. First, the bearish argument. There are two important resistances lined up, the 20-day exponential moving average and 50-day exponential moving average, both placed within the next 300 points. And the behavior of big banks after the numbers hasn't been that strong. But then on Friday, at least, the bank Nifty made a higher high and higher low. So at least that gives you some important levels to watch out for.
All right, Anuj, have a great day. Have a good week as well. Thanks a lot for joining in. So the Nifty is all set to test the 100-day moving average. Are we going to conquer the range on the upside? Sudarshan Sukhani of Technical Trends and Mitesh Thakkar joins in. Sudarshan, good morning. You have been saying for a while that the Nifty is slowly but surely inching up higher. Is that your, strategy for this week as well? And what are the levels to watch?
Yeah, good morning, Sonia. You're right. That's the point, that the Nifty has been inching higher. But unfortunately, it's not crossing significant thresholds. As we all understand, it faces resistance every time it tries to cross 17,900, 17,950. And that's not a good sign. So today, I think my view is now changing. The change is that until the Nifty crosses 17,950, I don't think we are looking at a bullish trade. That's for today. But a short side trade opens up if the Nifty falls below 17,780, which is the 2-day low. It's not a magic number. It's just the lowest of the last 2 days. So below 17,780, a short trade opens up and traders maybe do well to buy put options rather than go short in futures. But that's taking a short side trade. I would not take a long trade today at all. The view is slowly changing. I hope I am proved wrong. But as of now, the bullish view is only if the threshold is crossed, and a bearish view is almost immediate. The bank Nifty also has a similar pattern. I would go short below 41,100 and avoid long positions for the day.
41,100 on the Nifty bank, on the Nifty 17,780 odd. That's a crucial level. Got that, Sudarshan. Thanks so much for that. Mitesh, good morning. Coming across to you. What's your trade on the indices?
Good morning, Arjun. Last many days, I've maintained that the markets will be range-bound and basically choppy, but not giving you a directional follow-through. So I think that's what playing out. 17,700, 17,980 are the contours or the ranges which I'm looking at. And till we get a closing below that or above that, I think we might actually just keep on contracting. So I think it's a market when you would not want to trade the index. Most of the volatility indicators are turning flat and suggesting that this range-bound outlook will continue for next couple of sessions as well. I think as we approach the February expiry, you might see a directional breakout. So till then, I think we have been trading with stock-specific biases, a bit more towards the long side, but I think very clearly, I think stock-specific is the way to go forward.
Okay, since you've said a bit more towards the long side, can you quickly take us through your stock-specific ideas, Mitesh?
Yeah. Morning, Sonia. I have 3 buy calls today. Oberoi Realty, I think after the numbers has given signs of an uptrend. That's a buy with a stop at 846, targets of 885 to 890 here. Gas stocks have been very bullish on IGL and MGL, and today I've picked MGL as the recommendation. That's a buy with a stop below 888 for targets of 930. And Navin Florin is something which is now giving signals of completing the correction and starting an up move. That's a buy with a stop below 4,300 for targets of 4,450 on the upside. And one sell call, that's on IEX. That's a sell with a stop just above 137.5 for possible targets of around 130, maybe even lower.
All right. Sudarshan, what about you? What are your picks?
Well, I have a mix of buy and sells because I'm a little downbeat on the Nifty. Is it Monday morning or it's my charts? I don't know. But anyway, Coal India is an intraday short. See, short selling should be done only intraday. Only the Nifty is an instrument where you can carry positions, where you should carry positions on the short side. Stocks are best sold only during the day. Coal India has a stop loss of 215. DLF is a buying opportunity. We are looking at a buy on dips opportunity. If we are wrong, we just get stopped out for a small, say, setback, and otherwise we are buying the dip. Stop under 350. Manappuram is another intraday short. Stop above 117. And finally, ONGC is a buy. It's a positional buy. Don't expect something to happen today. But if you have the patience, keep a stop under 143 and buy ONGC.
Okay, I assure you it's a Monday morning blues and not your charts that are fooling you, Sudarshan. But don't worry, that'll pass. Let's take a quick break. On the other side, we have the pre-opening rates. We also have Arun Shukla, the president